There are some real estate methods that I hate. Subject to, the stack, the BRRRR method, house hacking. Even though I've done many of these, why do I absolutely hate those? I'm going to go into that in this episode and how you should actually look at your portfolio if you want to advance in a significant way. Now, for context, if you're new to the channel, my name is Christian. I bought hundreds of rentals starting with little to no money. And I did a ton of creative finance to build a massive portfolio, financial freedom, retire my wife, build my dream house, the whole 9 yards. I was able to do this because I got off of the mindset of I'm going to find the strategy that works for me. People have this idea that, hey, I have a very specific box. I'm going to only buy deals that fit this model. So I'm going to find the strategy that I resonated with on someone's Instagram feed or some podcast online. I'm going to go all in. So what are some of these methods? Subject to, I can leave someone's existing debt in place. I can go ahead and buy the property subject to their existing debt. They pay their mortgage. I own the property. I pay them to pay their mortgage. It has a bunch of risks, though you can take out a lot of real estate this way, regardless of the existing debt. The BRRRR method, BRRRR. R? Buy, rehab, rent, refinance, repeat. This model means you put money into a property, you increase the value, lease it up, maximize what it's worth, go to the bank, pull out the original money that you put into it because you've now increased the value, and recycle that capital. Benefits, the money goes into a property and back out. You get to use the same money again and again. Cons, takes a lot of time. If you focus on this as your only method, you will buy very little real estate in a very effective manner. The house hack. I'm going to buy a small multifamily property that makes some money that I will live in. I'll have tenants surrounding that help me either pay all of or most of my mortgage. And eventually I'll keep this as a rental property and I will continue to move to do this. Pros, you can buy property and eliminate your cost of living, which is pretty awesome. Like your largest expense is typically your rent. If someone else can pay your rent for you, pretty awesome. Cons, takes a long time, requires you to have tenants who share walls with you, requires you to move frequently if you want to scale. Also, typically only works in small buildings that don't move you forward very fast. All of these methods you can use, and there's a million more. But falling in love with one strategy is the wrong way to do this. Introducing the only thing that matters, deal, then debt, then equity. And if you follow this channel for any period of time, which by the way, you should if you don't click the button, but if you followed this channel for any period of time, you've heard this mentioned a billion times. I'm hoping this is the time that it sinks in for you though. Deal first, then debt, then equity. The BRRRR method. Subject to, house hacking. The stack, buy one little property, go over time, BRRRR it out, then buy a slightly bigger property, then buy a slightly bigger property. Any of these methods, if you only look at them, they are debt and equity strategies. They do not care about the deal. They say, hey, we're going to come up with our exit plan, what will work for this deal, how I want to scale before I even have the opportunity. Now imagine this. You're a salesperson. You're going to sell someone on investing in your project. You come in, hey, I need as much money as possible because I'm going to do this huge project. Well, what's the project? I'm not sure yet, but I'm really excited to do it, and I want you to invest in me. That would be crazy, right? Imagine trying to raise capital for a deal you don't have. This is what most people try to do. And they go, hey, I read online about this method. Here's my business plan. We're going to find a deal that will work for this BRRRR strategy, and we're going to refinance your money back out. Cool. What's the deal? I'm hunting for it, but I'll call you when I know. Try it this way instead. I'm going to go find a deal. I am going to look for the opportunities and the deal size that I want to own. I'm not going to limit myself to a duplex or a 50-unit building. I'm just going to look at everything in between. What is available? Say I'm interested in 5 units and up. 5 to 50 units. What could I take out today? I'm going to look on market. I'm going to meet the other owners in the market who own those type of properties and form meaningful connections. And eventually, someone's going to reach out to me and say, hey, I am looking at selling this. This is what I'm looking for. Would this work for you? Well, now you have a deal. Now, if you've only decided before you bought it, if you've already decided, hey, I'm going to buy it this way on deals that work on this structure, you're going to massively limit the opportunities that you find. If you instead start looking at the opportunities, you might find one and go, this doesn't work as a BRRRR, but it cash flows a ton day one. Is there a debt structure in which I can bring on someone and share out of the cash flow instead of the future upside. Now I don't have to do the BRRRR strategy, but I can buy a portfolio, I can buy a property, add it to my portfolio, increase my income today, move towards the goal without being in love with this strategy. If I decided I'm only looking for things where I can buy subject to the existing debt, and there's a property that I could take out conventionally where we've just absolutely knocked it out of the park on price, I have an amazing deal, but I pass it by because they're not going to do my debt structure. Or what if there's a 12plex in your market that you could buy 5, 10, maybe even 0% down? It's right there in front of you, but you don't look for it because you're dead set on, hey, someone online said I need to start with up to a 4plex. I need to share it with roommates. You now are living in a little 4plex with 3 other tenants surrounding you when you could have bought a 12-unit building, $0 out of pocket, that could be paying the mortgage on whatever house you wanted to buy. The point is you start with the opportunity, then you look at the available debt products. That's going to be most of your money. The bank debt, seller financing, hard money, private capital, lots of ways to structure it. But what is the right debt product? Once you find the available debt products, do you need to bring in additional money? If you go deal then debt then equity, the strategy will reveal itself to you and it will match the deal. Find the opportunity first, then come up with the strategy. Do not come up with your strategy first. I think it's the dumbest thing that we do online, and almost everyone does it. If you've watched podcasts, you watch Bigger Pockets, love Bigger Pockets. The content is amazing, but what happens is people fall in love with certain strategies, and 10 years into their career, they look back and they have 2 duplexes. And they're like, what the heck happened? I'm not free. The path to financial freedom is deal debt equity, DDE. Memorize it, live by it. Your deals will write their own structures. If you want to learn more about creative deal structures, again, follow this channel. I talk about this stuff every single week, every Tuesday, every Wednesday, every Friday, occasionally even go live on a Saturday. Guys, we have a ton of content here for you on creatively structuring. Do not focus on the method, focus on the deal.